what we're looking to do at CKC Fund is to plug into the existing ecosystem. I think that some more traditional financial professionals and investors have a somewhat sour taste in their mouths from some of the earlier years of digital assets, where there were these sort of very reactionary type of a lot of very reactionary type of rhetoric. But looking at this in terms of bridging the old and the new together and balancing that is, I think, a really important point in terms of responsible, risk mitigated and successful investing. Beyond that, you also raise a point about alternative assets in general, and I agree. I think there are a lot of really exciting opportunities, not just in crypto, but in various other asset classes. For one thing, things that I have personally found interesting and exciting as potential investments for myself, have been things like they're starting to sprout up watch funds or fine wine funds, or a variety of these kind of more exotic funds, as well as more kind of exotic esoteric investments. But to your point again, just because it's not another planet, it's maybe just another continent, or even maybe just another country on the same continent. So still a lot of proximity. And lastly, your point about supply and demand, I think is really well taken. When we look at the demand for alternative assets such as crypto versus the supply of asset managers, private wealth advisors, and related, who actually provide those resources. So to Delia's point about the middle ground, one key way that I see as a way towards that middle ground and towards an equilibrium between the old and the new, and between an equilibrium between the supply and the demand, is collaboration, where you have an opportunity, for example, for more established wealth managers to partner with emerging fund managers in a way where each can learn from each other, each can rely on and grow through each other's infrastructure, because there are very different types of infrastructure required to operate, for example, a crypto fund versus a traditional asset management business. But then the traditional asset managers can provide these types of service through partnership to their clients in a way where they have, through partnership, some level of oversight and say on what is going on. So that spirit of equilibrium and collaboration is I think, a beautiful one to leave things with. Before we end for the day, curious if either of you has any last thoughts on anything poignant that we haven't discussed yet, or any trends that you might suggest for viewers to watch out for. Maybe we can start with Delia.
Yeah, so as far as trends, I really think that this year, over the last actually 2 years, we'll see a huge adoption of tokenization. We didn't talk about that, but the real world assets and the tokenization of those assets will really have a huge impact on the whole digital asset market. So. And the main reason actually I said that, because you can actually tokenize everything. Going back to your point, David, about the wine or everything. You can actually go and do real estate. You can do art. You can do precious metals, or even you can tokenize equity, bonds, or derivatives, and you can just convert them into the digital assets through this tokenization process. And by doing that, you create not only efficiencies, because you eliminate the middleman for the settlements, but you also create the liquidity. And one thing that actually I want to draw a comparison here is that in late 90s or early 2000, you had this tokenization of stocks, right? And that was a huge boom for the retail investors that really converted into the financial services that really had a huge exponential growth, right? And via the tokenization, this is exactly what you're going to see, right? You're going to create so much liquidity in some type of illiquid assets that initially the investors could not buy because they may be too expensive, right? But now, because of this fractional type of shareholders that you can actually sell, they can actually buy and gain exposure to, right? So in my view is that this is the trend that I will really watch carefully over the next year or two. And then also with the approval of the ETF for
Mm.
Bitcoin,
The
what
elephant
I
in the room.
really
Yes.
see is that is going to be, we'll see more and more those multi-assets ETFs coming online.
Mm.
And that again will drive a lot of kind of retail adoption, and it
Mhm.
will make really investment into the digital assets more common, right? And more user friendly, right? Because you can actually go and buy exposure via an ETF, right? It's not only exposure to Bitcoin, but exposure to the multi-asset class, to an industry, to a sub-industry, which is part of the digital assets.
Those are great points. In particular, talking about the tokenization opportunity, a variety of really top global banks, global think tanks are forecasting this as a multi-trillion-dollar marketplace opportunity, the tokenization of real-world assets by as soon as 2030, with projections ranging from between 5 trillion to as much as upwards of 20 trillion. So definitely some exciting opportunities there to look out for.